This video is meant for those who want to learn more about Tesla stock splits in 2020. In August 2022, Tesla's stock split 3-for-1 for $900 per share after splitting 5-for-1 for $2,000 2 years earlier. However, what if I told you that the next stock split might occur since 2024? Let's start, shall we? It's important to note that a stock split is not the same as a sheer body bag. Before we get started, hit the like and subscribe buttons and make sure you share his video with your friends who are interested in making some serious money. What if there was a way to strategically acquire shares to cash out with the knowledge of the stock split? Through the process of dividing a company's current shares into many shares, a stock split lowers the price per share while maintaining the company's total worth. In contrast, a share buyback occurs when the business buys back its shares from its owners, thereby decreasing the total number of outstanding shares and raising the value of each share that remains. In recent years, Tesla has split its shares and repurchased shares. The first stock split for the company happened in August 2020 when shares were split 5-for-1 for a price of $2,000 each. This was followed by another split in August 2022 when shares were split 3-for-1 for a price of $900. And these splits were perceived as a means of increasing the accessibility of Tesla's shares to a larger group of investors, since some found it difficult to invest in the company through share buybacks due to the higher price per share prior to the splits. Tesla has participated in a number of these activities recently. In March 2019, the business revealed plans to repurchase $2 billion worth of shares over the next 2 years. This was viewed as a means of providing value to shareholders in addition to signal confidence in the company's long-term prospects. In February 2021, Tesla announced another share buyback program, this time for up to $5 billion worth of shares, as for the possibility of another stock split. In 2024, it's difficult to say for sure. Stock splits are typically announced by companies based on a variety of factors, including the overall market conditions, the company's stock price, and the company's goal for its stock. While it's certainly possible that Tesla could announce stock split in the coming years, there's no way to know for sure at this point in terms of strategically acquiring shares to cash out with the knowledge of a stock split. It's worth noting that this is a speculative strategy that involves a significant amount of risk. It's impossible to predict with certainty when a company will announce a stock split, and even if one is announced, there's no guarantee that the stock price will continue to rise in the aftermath. As with any investment strategy, it's important to do thorough research and consider all relevant factors before making any decisions. Before we get into projections and figures, it's interesting to note a few interesting facts about how Tesla handles stock splits. As I previously mentioned, when Tesla first split its shares, the price per share was $2,000. The second time, the price per share was closer to $1,000. This suggests that the company prefers to avoid 4-digit stock prices. Even though Google and Amazon split their shares 24 hours ago, it still seems absurd to have shares valued in the thousands. Instead, it's predicted that Tesla will split its shares again in the high hundreds, around $1,000. Another interesting fact is that the company doesn't want the price of the shares to drop below 200 after a stock split. The number of new automobiles on the road in 2030 is estimated to be 14 million, although it's likely to be closer to 20 million, given that the low end of its range is approximately 300. This is a rather significant figure to take into consideration while going into the future, although we do not know the number of customers paying the entire FSD amount each month or have FSD subscription numbers. Let's start with an EPS projection of $45 for 2030. Assuming that 15 of the newly sold vehicles will convert to or pay for the full FSD amount. I may consider that bullish, but Tesla's results as early as this year could surprise. We already know the answer for 2020 at a P about 50, and we can calculate what the stock prices would be and when they will split. But given that we're still in a bear market and the P for 2023 is currently about 60, a P of 60 is quite remarkable. Make sure to press the like button if you're interested in learning more about Tesla stock splits and estimates for the company's delivery and production figures. And the subscribe button. Many factors such as market movements, interest rates, inflation, and Fed policies are involved in determining Tesla's future. Notwithstanding this uncertainty, I believe that Tesla's P will be roughly 50 for 2020 and 2023, because I believe that we will likely be in a bull market by the end of this year, or at least halfway through. Gary Black anticipates that the company will be valued at $1.2 trillion at a stock price of about $370 per share, which would give it an absurd P of 74. In contrast, I believe that more realistic P of 50 would place the stock price at about 400. In a bull market, there's always a chance that the market could become irrational and push prices higher than they really should. While stocks like Tesla, Meta, and Netflix may be money printing machines, they can still fall 80% if fear takes control. If Tesla experiences a stock split, the price per share could drop to about $200. Buying and selling can be motivated more by speculation and fear than by real fundamentals, which would result in a fourfold gain in the stock price. But based on my predictions, I believe the stock price will likely drop to about 70 pence in 2025 and $40 annually in 2026 after a stock split. Until there is a significant innovation that propels Tesla stocks to greater heights, I don't see Tesla's price rising much above the low 20s for the remainder of this decade and the first half of the next. Last reason, if the average price per share and for this ticket is expected to be in the mid 50s for the next 10 years and in the low 30s for a decade after that. It's difficult to predict when Tesla will split its shares, but my goal is 6 type of 300 per share in 2023, when the stock price is probably going to be around 400 with a P of 50 in 2024. Price declines of up to $45 with the PVOWers, with a P of 45 are possible in 2025, and price drops to about $700 with a P of 40 in 2026. Although it's impossible to predict the future with absolute accuracy, I think Tesla will have at least 2 significant stock splits in the upcoming years, maybe as early as 2024. Depending on growth. I feel pretty confident in my predictions and look forward to seeing how this will play out in reality. While this is what some analysts think, it's highly unlikely that Tesla will do a stock split anytime soon. Instead, the next opportunity for a split maybe when the stock reaches a value of 500 to 600 per share, which could happen towards the end of this decade or in the early stages of 2030s. I believe that 2026 would be the ideal time for a split, but anywhere between 2025 and 2027 would also work. We just also want to say, as for anyone thinking of investing now, before a buyback happens during a stock split, the total value of an investor's holdings remains the same, but the number of shares increasing and the price per share decreases proportionately. Therefore, the number of shares an investor needs to make the most money during the stock split depends on the individual's investment goals and the specific details of the split. For example, if a company announces a 2-for-1 stock split, an investor who owns 100 shares before the split will now own 200 shares after the split. But the value of their holdings will remain the same. If the stock price doubles after the split, the investors' holdings will be worth twice as much as they were before. The split, in general, owning a larger number of shares, can potentially result in greater return on investment during a stock split. But it's important to remember that investing involves risks, and there's no guarantee to profit. Additionally, stock splits are not the only factor that affects the value. Every company shares and investors should consider all performance and prospects of the company before making investment decisions. Although stock splits are hard to predict, it makes sense for Tesla to keep its stock price at 3 figures to make it more accessible to the average person. Let's wait and see how well this prediction plays out. In the coming years, I'm pretty confident that it will hold its ground. Thank you for watching. If you enjoyed this type of content, don't forget to like and subscribe. Again, thanks for staying until the end of the video, and we'll see you in the next